Well, good evening, everyone. Welcome back to the channel. So, one more live stream for the month of March until it'll have to be another month before I see you guys again. Or I won't see you all till next month, which technically is only 4 hours away. But yeah, this will be our last live stream of March 2024. It really has been a great month. So, this is going to be a live show. So, what do we say for live shows?
We'll do it live. Okay. We'll do it live!
We'll do it live, right? Okay, so in this show today, I actually want to talk about several different topics. All right, we got our top two commenters that are always like vying for number one. I see Richard King and Chuck Stank. Richard gets the first place trophy again. Okay, let me try to, let me pop out comments over here. All right, good, we got the comments here. I'm also going to go live in the Discord, so anyone that wants to chat with me there can do so. So I'm going to go voice live over here. I want to talk about the Robinhood new credit card and the 1% matching. So bottom left here, if anyone wants to join in with me on the live show, I'm going to be live in the voice chat. Let me announce it now on the Discord as well. Let's see. Allergies got me today. All right, let's see now. Okay, sending out now to everyone. Boomer Bill, right? Do it live. Okay, so first off, we've got we're supposed to have Dave Massa from Roundhill coming on tomorrow, and that should be very interesting. If you all haven't submitted questions, then definitely do. We want to have a interesting discussion for sure. Okay, so let's see here. We'll read some Reddit threads here. Ooh, right on cue here. Someone, who do we have? Let's see. We've got Ivan, new member. Welcome, Ivan. Go ahead and unmute your mic. While he's figuring that out, let's continue with the... So Robinhood has announced a 3% cashback credit card. This Reddit post actually says this person doesn't have any particular bias towards Robinhood. It's a platform with its own set of advantages, disadvantages, so on and so forth. The offer, it's 3% cashback on all purchases. That's pretty good, of all purchases of anything. No categories or whatnot. No foreign transaction fees. No annual fees. The claim of no annual fees is misleading. To qualify for the card, you need to be a Robinhood Gold member, which comes with a $5 per month or $50 per year fee. How dare they? Effectively bringing the annual cost to $50 or $60. So in reality, the absence of annual fees is not entirely true. It's more like $60 instead of $0. For those already using 2% cashback credit, like Citi Double Cashback or PayPal, you need to spend at least $6,000 to see any tangible benefit from this new card. That's very similar to the Amex ones too. So any of my super long-time followers know that I'm a huge fan of credit card churning. It's one of my side hustles. I actually haven't done as much of it this year, but I've done a lot of it in the past. So I have what I call the starting lineup. I have like 3 U.S. bank cards. I have some Citi cards. I have some Chase cards. I have Capital One, and they all serve a purpose. They all pay me anywhere from 3 to 5% cash back, and I've gotten like a welcome bonus from all of them as well. Okay, so not only do we have a 3% cashback credit card from Robinhood, let's see who we have. Oh, we have someone that has their mic already unmuted. We've got Ivan and we've got Paulo14. Go ahead, Paulo, talk to us. Are you able to... Oh, looks like you're trying to join on something else here, camera or something. Are you able to talk? Anyway, alright, while you guys are figuring that out, I'll keep going. Oh, who else do we have? We have Chuck on. Oh, a lot of you are coming on now. Someone's got to be the first one to talk, other than me. Hey, Ivan, did you figure out your mic yet? Anyway, okay, so Robinhood, 3% cash back on the credit card. But what's really cool, too, and this seems like they might be one of the first ones to do this, 1% matching on deposits there. So let's see. For an IRA, this might have been something they've been doing for some time. The IRA match is an extra 3% match on annual contributions with Robinhood Gold, or 1% without. All IRA transfers and old 401k rollovers earn 1%. Well, that's interesting. So 1%. 1% of a big account, like say you have like, you know, a $500,000 401k or so, 1% of that could be $5,000 they're giving you. That's pretty good, especially if your current broker isn't paying you anything. Okay, so that's on the rollover. Hi, are you trying to talk there, Paulo? I think I heard you.
Yes.
Hi, how are you?
Hello.
All right, yeah, I hear you.
I'm fine.
Great.
Yeah,
So,
I'm fine. And you?
great. So are you new to the channel?
It's very. Yes.
All right. Yeah, what were you going to
What?
say?
No, I didn't understand your question. Can you repeat, please?
Oh, no, I didn't ask a question. I was just saying you just recently found the channel.
Yes. I was following previously the Khmer's and the retire on dividend. And
Oh,
so
okay.
on. And I have been following you on YouTube. So I decided to enter to join your Discord.
Oh, great. That's good to hear.
Yeah.
So are you mainly a dividend
Very
investor?
Yes, I started in last November,
Okay.
and I was growing from $100 to now I have 5,000.
Per month?
No, not yet.
Ah, okay.
I will be there. Just in the total portfolio.
Okay. Oh, 5,000. And which funds are you in?
Several. I mean, AIYY,
Okay, YieldMax.
AMBY.
Mm-hmm.
Yes. UOT. Where else? QGT, XGT.
Oh, Roundhill.
Yes. And where else? IWMY, QQQY.
Uh-huh.
Yes. I sold all my Connie and I'm going into Misty,
Okay.
but I would like to buy again Connie.
So you're getting into Misty at a high price.
Yes, that's what I was thinking about. Maybe trying to sell, but I haven't done yet.
Mm-hmm.
I'm just thinking about, because the prospects for the dividends are good.
Yeah. Yeah, for sure. And we're up
Or
in
maybe
the price return is 103%.
yeah. So there are people saying that it may reach $5 or $7, but I think 7 is not realistic.
Uh-huh.
Maybe between 2 and 3.
Yeah,
Something
7.
like that.
Some people are saying $7 for the dividend estimate.
Yes.
Yeah, that's probably.
Uh-huh. Today I watched a video on YouTube, and the guy is talking about 7, but I think it's too much.
Okay. Yeah, I think it might be probably closer to 3 or 4%.
Hmm.
I would
Yeah.
think based on the upside and the volatility and all that, like I could see it being. I mean, that would be monthly. So if it's that monthly, then it would be like 36% annualized.
Yeah, I think that this ETF thing is something that you need to play in a long term.
Uh huh.
You need to understand the fluctuations of prices and to position yourself in a better moment for each ETF.
Mm-hmm.
So things are moving and changing quickly, and it depends on the market sentiment. It depends on it depends on the crypto market. It depends on the interest rate. It depends on several factors. So you need to understand the macroeconomics and play accordingly.
Right. Yeah, for sure.
Yeah,
What's
that's it.
interesting, I'm looking
Hmm.
on the chart here. So MSTY has actually outperformed MSTR over the past month, which is it's rare for a dividend yielding fund. Although we haven't gotten our first dividend yet, I believe we're going to get that declared coming up here this week. Let's see.
Well, by the way, I am in Brazil.
Oh, okay. Is that are you just visiting there? Or is that where you live?
Yes, in Salvador.
Okay.
That's the first capital of Brazil. And you, where are you?
I'm in
In
Florida
which city?
in the United States.
Florida.
Yeah.
Okay. Yeah. Yes, I know.
Hmm.
United States, but the city I didn't know.
Oh yeah. Yeah, Tampa, Florida. Yeah,
Well, for me,
actually.
it
Uh
was
huh.
a yes.
Yeah, next week
Sorry.
we should get our dividend for Misty. At
For
least.
me, it was a very big surprise to see so high dividend yields
Right.
in the U.S. because generally in the U.S. you talked about low dividend yields, but here in Brazil we are used to higher uh, interest rates. So for me, it was a big surprise.
Oh, you're used to higher interest rates in Brazil.
No, we are used to higher interest rates if we compare to the United States. But
Oh,
when I saw these high dividend yields being paid by ETFs in the US,
yeah.
then it was a very big surprise for me. You understand?
Right. Oh yeah, definitely.
Hmm. Yeah, that's it.
So, well, for $5,000, you're pretty spread out on funds. You named several of them.
Yes, I can tell you precisely if I can open my application.
Mm-hmm.
So I have AIYY,
Uh huh.
AMDY, uh, Coney, no,
You sold Coney.
IWMY,
Yep.
Clip, and then MRNY, and, NVDY,
Oh, that's a good one.
QDT,
Yep.
QQQY, SQY, Chisley, OT, XDT. So this is the list.
Wow, interesting. I'll have to do a monthly like update on these because actually a commenter CJ Navaj here saying 12 of 18 funds beat their underlying this month. Now obviously it will be different from month to month, but these can temporarily outperform. Yeah, so I noticed that with Misty, it outperformed like by 3% the underlying. That's interesting. But then again, it's a brand new fund.
So
Interesting.
any new interview in place?
Yeah, tomorrow, Round Hill.
Oh yes,
Yeah, so
I forgot it.
submit questions there. We have a thread for Roundhill. Yeah, we're confirmed. I haven't heard anything otherwise. So we've got the thread questions for Roundhill Investments.
Yeah, it's very interesting to have a weekly ETF.
For sure. And we should be getting the declaration for the second week, maybe tomorrow.
And hopefully we are going to get new ETFs on this basis. I mean, paying weekly.
Yeah, I think we're definitely going to have a lot of copycat companies that are going to pay out weekly. But we'll see how it goes. I know SoFi tried these, but they had to stop doing them for some reason. But anyway, all right. Well, let's see. We have like 5 people on here. Let me give someone else a chance to talk here. Hedge fund of one. How's it going?
Yeah. Hey,
Yeah.
pretty good.
Yeah. I saw you. Uh-huh.
The reason why Misty would outperform the underlying is because the underlying is consolidating sideways. And in that kind of environment, that's perfect for option sellers.
Uh-huh.
And if they're selling both puts and calls, perfect. I would expect it to outperform.
Yeah.
Until they'd have their first distribution.
That's going to be
For
the trick.
for that distribution, well, it's not going to outperform at that point. It'll have to, try to recover the dividend drop.
Mm-hmm.
But if the underlying continues to go sideways or just drifts upward, you might see more outperformance. Just on the recovery from the ex-dividend drop, but that would be expected.
Right.
But the performance of these high yield ETFs is strictly, it's just related to the underlying, how the underlying performs, and a little complexity added to that, how the trading, how their options trading performs. If they're able to, depending on their methodology or their approach, if they continually just mechanically just sell puts even while the market is dropping,
Mm-hmm.
they're going to underperform. Especially since they cap out their gains. So that's just the fact of life with that. But that's why I keep harping on buy and hedge, just like what Jay Petrocelli says.
Yeah, that's the title of his book.
It's up to them to maximize the yield. And they do that mechanically with their approach. They don't vary. So if they're going to maximize the yield, and it will lead to NAV erosion. That's just the fact of life, and he mentions it in the prospectus and everything. So there's nothing underhanded happening like some people have accused. They maximize the yield. It's our job to deal with to protect from the NAV erosion. That's the way I see it.
Mm-hmm.
It's just like with Kathy Wood's, the ARC funds. It was her job to pick these massive growth stocks to put into the fund. They actually have options on the funds.
Right.
So it's our job, if we choose to invest, to protect the value.
Well,
people could have bought put options to protect their value. So people complaining about Kathy Woods, well, same thing with people complaining about Petrocelli. If there's options on the fund,
mm-hmm.
use them to protect yourself.
Right. I would
And
imagine not
so that's,
everyone is
you know,
sophisticated to the point of doing protective puts like you're saying.
they don't have to be sophisticated.
Uh huh.
Just learn a little bit about how to do it,
Yeah.
and buy the puts when you buy the shares,
Yeah.
and then you're protected. So it's nothing really sophisticated about it. The way I see it is, I look at them like an extremely high yielding bond.
Oh
If I
yeah.
can, if I buy the puts deep in the money, of like $3 or $4 above the current price when I buy the shares,
Mm-hmm.
then I sleep at night. I don't worry about it. The thing can drop to zero, and I can exercise on their ass.
Yeah.
I can exercise the puts, and like I did a couple weeks ago, I exercised for effectively $30 a share on Tesla, and so I turned around and bought Tesla at in the market, at half of that. So
So you're
and
saying to buy a put at a higher strike price than what it's currently trading at?
yes, yes. So when you buy the shares, buy the uh buy the puts, say like $3 or $4 above, strike price, $3 or $4 above,
Mm-hmm.
maybe 3 or 4 months out on the expiration.
Okay.
And then I don't care how low it goes. It can drop, get cut in half. I'll uh I'll either be able to sell the puts at a much higher amount and then turn around and buy shares, or if I can't get the price I want for the puts, I'll just wait and exercise the puts at expiration time,
Mm-hmm.
and then I can turn around and buy the shares with the proceeds and still protect my position. So um, I can keep the cash dividend either stable or growing that way.
Uh-huh.
That's why they provide those options. Why would they provide the options if they didn't expect people to use them?
Right. Yeah, one of
So
the
it's
questions coming up for Roundhill is that there's actually no options that exist yet. So we'll definitely
right.
ask them tomorrow.
Yeah, that was me that put that question in.
Oh
But
yeah.
and I do understand. One of the guys came in, and he was right. He said that they Roundhill probably doesn't have they don't have the control over that,
Uh-huh.
but I think they can have influence. They can apply for it, or request it, that they would be available, and then that would give us the ability to hedge. Um, but hedging is that's what the professionals would do. They
Right.
don't just sit there when they. I don't own any stocks unless except for the ones I'm expecting dividends on. Other than that, all my positions are all options. If I'm looking for capital growth and that sort of thing, I use options for that. But you don't have to be real sophisticated to buy a put to protect your shares.
So you're
Just you can. Yeah, go ahead.
you're 100% dividend investor.
No, the way I put it is, if I want to go for capital growth, which I do, it's like probably half of my portfolio is in long-term options,
Uh-huh.
uh, call options. If I'm expecting it to go up, I do trade the downside too. So I'll buy put options for the downside. If I
Yeah.
expect the stock, if stock's going into a downtrend, I'll use put options to exploit the downtrend. But for dividends, for actual cash flow, that's the only reason I buy shares of stock. And so Tesla, I've gone ahead. I've been in Tesla for what is it, something like 6 months or something like that.
Oh, so
And,
you got it at a good price
I
then?
protected it. I got it I got it at a good price, but I still had to protect it.
Yeah.
I still that because it got cut, it almost cut in half from the price I started with. So,
Right.
and I did have to exercise the options to, as part of that protection. I exercised the put options, and that allowed me to sell my shares at effectively $30 a share.
Wow.
And
Okay.
then turned around and bought more shares at like around 16 or so.
Hmm.
But I protected those shares too. So I used the proceeds to buy more shares, and I protected those shares. Uh, so I bought the shares at 16, and I bought the $19 puts.
Okay, and then you bought those, so the put price went up as the fund dropped.
Yes,
Yeah. So then
right.
you made premium on that, and then did you sell those puts again, or
Well, I tried to. Well, no, on the puts that I had before the reverse split,
yeah,
those puts were at like $15 strike puts, but with the reverse split, it worked out to like $30.
30?
Strike was $30
Yeah.
effectively.
Yep.
I mean, it's kind of weird how the math works, but I was able to then. Um, I tried to sell the puts because I prefer to just sell the puts and then use those proceeds and profits on the puts to then turn around and buy shares. But I couldn't. The market makers didn't give me the price I wanted,
Hmm.
so I went ahead and exercised the
Okay.
puts. When you exercise the puts, that's a put is a contract allowing you to sell your shares at a certain price by a certain time. That's all it is.
Right.
So if I'm able to sell the shares at $30 when they're trading at $15 or $16, then I've recouped any loss that I would have had on the shares.
Oh, I see.
And then I can turn around with those proceeds of what I just sold, turn around and buy the shares in the open market at half the price
Uh-huh.
since it had fallen. Um, so
But to lock in
and
the gain, with the puts, so you're
yeah.
buying them, and then are they expiring? Or are you selling out of them or closing them?
Well, normally I would prefer to sell them,
Yeah.
um, before, and then maybe, um, and forgive me, I'm trying to not use technical language too much,
Yeah.
but and I know you're familiar with it, but the so I'd prefer to sell the puts and maybe roll them forward, to a new
Okay. Yeah.
expiration
Roll
date,
them out. Yep.
by buying, for a later date and maybe a different strike price. It could be higher or lower strike price.
Right.
But to I'd prefer to do it that way. But if I can't get the price I need, because sometimes the market makers will widen the bid ask spread,
Uh-huh.
the spread between, okay, and so if they do that, and they'll often do that as you approach the expiration date, I think because they want you to exercise. I guess, I don't know, but anyway, we get down to the end, and if we're at expiration date and I can't get my price to sell and maybe roll the puts out or whatever, then I'll go ahead and exercise on them.
Hmm.
And meaning that it's my choice, since I own the puts, my choice. I can force the market to buy my shares at that strike price. So I was able to force them to buy the shares at $30 strike price.
Okay.
So then take those proceeds of that sale, because I just got in cash in exchange, $30 a share. Turn around, go back into the market, buy the shares at $15, $16, whatever it's trading at the time.
I see.
But then also I go ahead and protect it at the same time
Uh-huh.
with the in the money puts. And then what does that do? That causes the value to basically be pretty level. You know, I'm not gonna if the shares will not shoot up. Period. Tesla will not recover as fast as Tesla would. If Tesla makes a 20% move tomorrow,
Yeah, because
uh,
the upside is capped.
Tesla, yeah, the upside's capped. So I know for sure Tesla will not recover with as well as Tesla would.
Right.
That's just a given,
Yeah.
right? By the methodology of how they trade the options. But it will participate in almost all of the losses when Tesla falls.
Yes, that's a
So,
big frustration
so,
with the
so,
funds.
okay. But I'm not frustrated by that
Yeah.
because I've protected myself.
Right.
I know that and it's almost a given thing. So I can protect myself. They've given us the ability to protect ourselves. So take advantage of it.
True.
And
True.
one reason why I'm promoting is because I like a lot more of my fellow investors to do well, with the fund
Yeah.
and build their cash dividends. And at the same time, if they participate alongside me, we'll have more people buying the puts, and then the volume it makes the puts and the calls more liquid, so that I can get better prices when I try to buy or sell.
Yes.
Market makers love it when you got a high volume of in the options, and so I think it would be beneficial for all of us if we move that direction and start protecting ourselves.
Mm-hmm.
So I've got more cash dividends than I had before because I have more shares now.
Right.
And I'm still protected. Still protected. That's the whole idea. I don't, just end my program of protecting myself. But that's what professionals do. And we ought to be looking at this as like we're professionals and not giving the excuse, well, I'm an amateur. I'm not smart enough to know how to trade options or something like that.
Right. No, I agree with you. I think
it's all it is insurance.
Yeah.
I know you're not giving that excuse, but I hear it over and over.
Yeah.
And especially on that other channel, I mean, he banned people just for suggesting
Yeah.
to do what I just suggested.
So,
I mean,
Blake,
that's crazy.
Yeah, Blake Downer, my podcast co-host. So yeah, he was one that got banned for
Yeah,
suggesting the same thing.
Right.
Yeah, he's trying to help them out, and he gets banned.
Exactly.
Yeah. So I don't know what's
exactly
wrong.
Right.
I don't know what was wrong with that. I mean, but yeah, he mentioned that
No,
in the comments
we're trying
here.
to help.
Yep. Yeah, hedging by buying puts and rolling. That's almost exactly what he was saying.
Yeah.
He had a question for you. Do you sell calls and make it into a caller?
No, I don't. And here's the reason why. And I do believe in doing that in the right situations.
Yeah.
And I do that in some other situations. With a high dividend, especially like this,
Mm-hmm.
when you buy the put, or the present value. Forgive me for any technical speak or whatever, but the present value of all the dividends until expiration date are added to the price of the puts, and by the same token, the present value of all dividends until expiration date is subtracted from the price of the calls.
Yes.
So if you sell the call, you're gonna not get enough premium to make it worth it on a high dividend yielder. Sometimes I've looked into that, and sometimes when I try to sell a call against a high dividend payer, the price that I could sell it at was less than the intrinsic value. If I try to do it in the money call, to help protect on some of the downside, I couldn't even get enough to make up for the price to get to the price that it was trading at the time.
Yeah.
And then out of the money, it's like pennies. You can't, if you try to sell a call out of the money on Tesla, you might get pennies, and that's for expiration several months out. It's it's just not worth it to me. And then if by some crazy chance Tesla moves higher through that strike, you've just capped out yourself, just like YieldMax is doing to themselves. So I just, no, it's just a married put position. And see, the thing is, when I buy those puts, and it builds in that the value of the dividends until expiration in that price. But when I then later sell or exercise those puts, I get it all back.
Right.
So I get those I get those dividends back. That the value of those dividends that were built into the price that I paid, I get those back. So, and in the meantime, I collected cash dividends along the way. So that's why I do that. Yeah.
Yeah, that's great.
Yeah. So that's the idea. I do on other positions, like my long call positions, and those are long-term calls. It's like a year out on the expiration. If let's say I'm NVIDIA, that's what I did with NVIDIA. I have followed NVIDIA all the way up from the 100s up to 900.
Really?
Up to 900 using the long-term calls. And I would
you made
sell,
a fortune then.
Well, I was not exactly. I mean, I've made good money on it. I wouldn't call it a fortune. I was using, it's really like one contract size at a time. I didn't like load up and stuff because I do, sizing of your position is the number one risk what do you call it, risk mitigation factor or whatever. But then I also sell calls against those, sell shorter term calls against those longer term calls. So I'm kind of capping out my gain to some extent by doing that. But also I do buy puts too at like a lower delta to protect in case it just crashes.
Okay.
All my positions are hedged, so I'm not going to make a huge fortune, but I
see, because of
doing
the
pretty well.
puts. Yeah, then you're kind of limiting. It's not just like a naked call, so to speak.
Right. Yeah. I don't do anything naked except for one thing, but okay. But I don't do trading. I don't trade naked. Okay.
Right.
I'm not a naked put seller or something like that.
So what about
So,
like cash secured puts? Do you do those?
occasionally in like maybe a lower priced stock, if it makes sense to do that.
Yeah.
But my losses are always limited. So if in a lower price stock, then that would be kind of a natural limiter. If the stock goes to zero, then okay. But it was low and it was a smaller portion of my position. But in higher price stocks, I will sell puts, but always in spreads. So so that way any loss is limited. So
Right.
if say you sell the put, I don't know, Tesla. If I was going to sell a put in Tesla, it would be in a spread. and I might collect maybe my net credit would be maybe a third of the width of that spread. So maybe a $10 spread. So collect $300 on it, but that would risk $700. That would risk $700, but that's it. I wouldn't, even if Tesla would go bankrupt, I would only lose $700 in that case.
And that's go over that again. That's with a put and a call, or what?
Yeah.
Okay.
No, that's selling two puts. I mean, I'm sorry. That's selling one put and buying a lower strike price put. That's a credit spread. And the lower strike price put that I would buy is insurance against a catastrophic loss. So if you think, I always think of options as insurance. That's all it is.
Okay.
So a put option, if you buy a put option, you're buying insurance on something. You're buying insurance on the value of your underlying stock.
Mm-hmm.
And if you buy a call, well, really what they were meant for, they were meant to be insurance or a hedge. That's all options are, is hedges. Insurance against. So why would I buy a call as insurance? If I was short the stock.
Yeah.
If I was short the stock, I would buy a call to cap out any losses, or limit any losses that I might have if Tesla, just all of a sudden would run up, 10 times or something. My loss would be limited if I was short Tesla and I owned the calls. So now, of course, they can be used as speculation. That's why, people buy the call for speculation. And then, of course, who are they buying them from? They're buying them from owners of the stock who are selling the calls as covered calls in a covered call situation. So that's one thing is, let's say, one strategy could be to look at the on Tesla to look at the calls that YieldMax is selling against their synthetic stock position, and buy those calls.
Yes.
If you think Tesla is going up, buy the calls from YieldMax that YieldMax is selling to you
at those strikes.
And then see YieldMax has capped out any gains by selling those calls, but you have bought an theoretically unlimited gain.
See, right now I'm looking at their holdings here, like the April 24th $185 call. I don't think I would buy that because I don't expect Tesla to run up by that point. The April 24th.
Oh, the 185?
Yeah. I don't expect Tesla to run up by that point.
Yeah. No. Let's see, Tesla, it closed at about 175 on Friday, right?
Yeah, they had a little bit of a run up. Actually, I sold, believe it or not, I cashed out a call last week for a little bit of a gain, just one call, because they had that big day. What was it? Wednesday?
Yeah. You bought the call, so you were using that strategy? You bought the call from YieldMax?
No, I didn't pick their strike price. I had one further out.
Oh.
Yeah. I was actually going to do a leap.
No, I'm just and really, in doing that, of course, without, buying a call, just buying it is a speculation. That's not really using it as a hedge, but it's you're buying it from the hedgers, you're buying it from people like YieldMax who are doing it as a covered call.
Yeah.
And so they're betting that it won't go through that strike by the expiration date. Yeah. And you're betting that it will. So, and that's all insurance. That's all insurance is just a bet. on your house insurance, the insurance company is betting that your house will not burn down by the expiration date, and you're betting that it might. You're not hoping that it will burn down. You're hoping that it won't burn down, but you're putting your bet down that it could burn down, and you don't want that. And so that's basically the same idea with puts and calls. So I was really just joking when I said buy the calls from YieldMax, because I mean their whole idea is that, and they've through whatever testing, back testing, and everything, and then of course now in the real market, generally speaking, what they sell is going to expire worthless, or they're going to be able to buy it back at a much lower price than what they sold it at.
Right.
Both calls and puts.
So a question.
And the problem. Yeah, go ahead. Sorry.
A question came up about your strategy with the protective puts.
Uh-huh.
So, well, not so much a question, but a concern. Okay. The commenter said, $30 put must be costly on Tesla.
It was not 30. It was not a $30 strike when I bought it.
Right.
It was $15 when I bought it.
Before the split.
Before the reverse split.
Yeah.
So when the reverse split happened, then that effectively made my strike effectively $30, but for half the shares. For half the shares. So
yes.
So but my underlying shares were cut in half as well. So I mean it all, there was no difference, no gain or loss from the reverse split itself. It just the fact that everything adjusted, and now I was effectively, even though so when I bought the puts, the shares were trading at something. I bought the $15 puts. The shares were trading at about 12, and then the shares dropped to 8.5. Remember?
Yes.
Or 8.5 or 9, and then the reverse split happened, which doubled it back to up to like 18. But my strike price on my puts effectively adjusted to 30. So it kept the same ratio of the price, the strike price of my puts versus the underlying shares. But I was able to then take the proceeds and turn around and buy a bunch more shares.
Right.
Yeah.
Interesting. All right, I'm gonna let's see here. Marsh 1022 joined back in. Stay on though. We'll come back to you. You're a wealth of knowledge for sure.
Okay. Thank you.
Yep. Hey, Marsh 1022. I saw you join in last live stream. You weren't able to talk, so go ahead.
Oh no, just saying what's up. Saw you guys. Saw you were live.
Yeah.
Came in.
Right. So are you a YieldMax investor, mostly dividend investor, or what?
Oh yeah. I shared you my my portfolio on the portfolio comparison channel.
Oh, that's right. I'm overdue. Yeah, I haven't been doing a lot of those because we've been having a lot of other like fund managers and stuff I've been prepping for. But I'll get back on it. Yeah, this is the one here, isn't it? Yeah. Actually, we'll just go over this now.
I have a lot of YieldMax, and
yeah,
I was in Defiance, but I sold out of them because of it just seemed to be going down too much.
Right.
It just seemed like it wasn't recovering between the X dates.
Yeah, that's the QQQY and the JEPY, right?
Yeah.
Mm-hmm. Yeah, let's review those because I've noticed.
Was my largest.
Yeah.
That used to be my largest position, the QQQY, and then so I basically sold them and moved into SPYI.
SPYI. Yeah.
Yeah, and a little bit of QQQI, a little bit of FEPI.
Yeah, those seem like good ones. FEPI has become one of my favorites very quickly.
Yeah, I like FEPI a lot.
Mm-hmm.
I'll probably go more into that one.
Yeah. So we've got over 6 months. Yeah, the QQQY is down 15%. S&P over the same time is up 22%. JEPY is down 10%. That's price return, but even with total return, and I mentioned this to Sylvia when we had her on, total return, so we're slightly up. Well, we're up 14% in one, 12% in the other, but that's with all the dividends reinvesting. Do you look at dividends
Yeah.
for income?
Yeah, I'm trying to. I have my retirement through my employer that I have for growth.
Right.
So I try to do more yield on the side for just to replace my income to see if I can, cut back on working earlier.
Yeah, that makes sense. I'll go ahead and do your portfolio review now then. How about that?
Okay, hold on. I'm gonna switch over. I'm gonna switch mics real quick, so I'm not on my phone. 1 second.
Okay. Yeah, we'll just do it live. Okay, so impressive net worth here. Oh, Empower, that's the same one. I had my first 401k with them. So let's see.
Okay, I'm back.
Okay. So we've got, so this looks good. Let's look at, oh wow, you got everything here. You got mortgage, savings. Let's see. Oh, I see some Litecoin and some Grayscale Bitcoin.
Yeah, I kind of bought into that back in October, I think.
Uh-huh.
I just threw, $600 on Litecoin just to see if maybe I get lucky. So
Right.
far, it's been pretty good because it's up a lot, and the same with the BCHG. I kind of threw a couple, like $1,000 or $2 on it just to see maybe, okay, let's see if it actually runs up.
Right. So what's your like income goal monthly?
I would say 4K
Uh-huh.
because I kind of weigh it as like risky income and low risk income. So I'm looking 4K of kind of like steady income of that 12% to 15% yield where I'm getting that, not from the YieldMax. I kind of just use the YieldMax to build that up.
Right. Let's see. So you've got, yeah, your Grayscale, you're way up in there.
Yeah.
So in the individual here, yeah, that looks good. Up. That's like a 75% rate of return on, wait a second. Did you start with, oh no, this is actually really good. You started with less than 3,000 and you're up to 10,000.
Yeah, I think I'm like 700% up on my Grayscale.
That's awesome. Yeah, you probably wish you bought even more, right?
Oh, I know, no, yeah, I really did wish I bought more, but I wasn't, I just put what I was willing to lose.
Okay.
I was like, well, I don't mind losing $600. I was like, I'll throw that in there.
Right. When did you buy in?
So, I bought my cost was $440.
Uh-huh.
When did I buy that? I think it was either September or October.
Oh, nice. For 6-7 months. That's awesome.
Yeah. And I don't really want to sell until I've had it for a year. So
Yeah.
I'm open. But if it goes up to like $200 or $150, I'll probably sell.
Mm-hmm. So let's see.
So
That's
I bought it in October.
yeah, you've almost 3x'd that cost basis there on those first three.
Yeah, it's like 718% return.
Yeah.
And then my BCHG is 250% return.
And then with your dividends here, wow, you're up in this one too.
Yeah, the only one I'm down on bad is Tesla.
Of course. But even that's not that bad.
Yeah, and I recently bought 25 more just to kind of DCA after the split.
Right.
And then I was like, I'm not buying any more Tesla. I'm done with that. I'm just gonna let it roll, see what happens.
Right. When did you first buy into Tesla?
Let me see, March.
Okay. So this month?
No. September of last year.
Okay.
Yeah, September of last year was my first buy, and then I bought again.
Yeah.
In September. I bought 3 times in September, and then I bought more in December, February, and then March. I was like, that's the last one.
Yeah. So you're way up in Coney. that looks good. SPYI, you're up. NVDY, AMDY.
Yeah, I
is
haven't gotten any.
Yeah.
I haven't gotten too many dividends. The SPYI is a new position. I had like 10 shares before, and then I basically after probably about a week ago, I rolled my QQQY
Mm-hmm.
and my IWMY into that SPYI and QQQI and FEPI position.
Okay. And then so AMDY slightly down, Clip slightly down. I'm in some Clip too. I don't exactly know why I got into it, but yeah, mine's down too.
Yeah, I think KWeb's kind of at its lowest. It's pretty low, so I feel like it doesn't really have much where else to go but up.
Mm-hmm.
And I'm not, like I said, I'm not gonna go crazy on it. I'm just gonna kind of $5-6 grand, let it pay.
Yeah, that makes sense. And then SVOL. SVOL is one that I like.
Oh, I love that fund a lot.
Yeah, we're actually working on getting those people on the channel too. What do you think of Roundhill? Are you looking into Roundhill at all?
I mean, I usually don't buy any of the funds until I see what they do for a couple months.
Mm-hmm.
So I have to wait and see.
Yeah, that makes sense. AMZY is up. Yeah, Tesla, of course.
Yeah, I like AMZY a lot. I like the YieldMax funds that tend to stay up. I mean, that's pretty
Yeah,
nice. But
don't we all? Yep. And then FBY.
and then UTLY, I'm kind of excited about them. I'll see what they do with that one.
Yeah, we just had a guest on in the last, or two live shows ago, rather, and he thinks it's going to pay like over 100% payout.
Yeah, I bought right before the X date, like 25 shares, and then I bought another 25 shares right after, right on the X date. So
Ah,
I got
okay.
half of the first distribution, and then
Okay, nice. And then I see some FIPB. That's a good one.
yeah, I
PayPal.
think Pepe, I'm gonna try to grow that one a lot. I'm gonna go pretty hard on that one.
Yep. And then, so these are all relatively new investments then.
The FEPI I just bought. The PayPal, I think I went from 30 to 70 shares.
Yeah.
I think I bought 70 shares last couple weeks ago.
Okay.
And the same Netflix I've had for a long time. I really want more Netflix because that one seems pretty stable. It seems to stay in the same. It seems to stay very flat and just pay out,
Right.
which I kind of actually kind of like that more. I prefer that more when they just run up a lot.
Right. Yeah, I would have to say this is one of the better dividend portfolios I've looked at. I mean, a lot of them that I've seen are down more. I mean, you're up actually in total. Yeah, you're up like 4,300.
Yeah, I also have some on a different account. I have some realty income.
Oh, some more stable ones.
Yeah, I have some more stable ones in a different portfolio.
Yeah. So then this one, like as a percentage, then you're like probably, like I say, within the 10 to 20% allocation for these, whereas the rest you're in like safe, like you were saying, index funds and stuff like that.
Yeah, I have like it's like a 453B
Mm-hmm.
instead of 401k. So it's like it's a Roth with it's like a $22,000 limit.
Yeah.
So I invest. I max that out. So every month that goes into mutual funds, basically.
Oh, is it mutual funds like through an employer?
Yeah. I can't control exactly what it goes into. It's just they have like an S&P fund and a couple other Russell fund. It's on the. If you look at the screenshot, it's the one. Let's see. Oh, maybe I didn't share it. It should have like the pie chart in it.
Oh, yeah, I don't know if you shared that one in this cluster here. Oh, wait, no, there it is. I think I just zoomed in too far.
Yeah. So the one on the left, that's my retirement.
Ah, there it is. Yeah, let's look at that one. Large cap blend, large cap, a lot of large cap. I like that.
Yeah.
I do like all aggressive in mine.
So the orange sector, which got kind of cut off, that's the specialty. So that's like REITs and energy and gold
Mm-hmm.
and like that kind of stuff.
Okay. Yeah, large cap. I would say in mine, I do a lot of it in large cap. I got almost half of it in large cap, and then I'm doing the small caps because I expect the Russell to have a really good year. I'm doing a lot of S&P, and then I do like company stock funds and stuff like that. But yeah, large cap,
Yes.
and especially like tech has just kicked butt over the last like 3 to 5 years.
Yeah, I go in there every couple months and I'll mess with the percentages of what it buys.
Oh, like a
'Cause
rebalance.
yeah, I'll rebalance what it burns. So I just recently weighted it like 2 months ago to buy more REITs.
Okay.
Buy more into the REIT fund. So I think like 25% is going into the REITs,
Yeah.
and then it's just like 5% to all the other ones. Because
Okay.
I think REITs are gonna explode whenever they do start cutting interest rates.
Yeah, there's another person on here, actually, the commenter here, Dissector. He likes REITs a lot, too. He's been saying some of the same stuff. But I think that's kind of a two-sided coin, because, like, for corporate real estate, there might even be a little bit of a bubble for corporate real estate.
Yeah.
Like, since COVID, there's still companies aren't having all their people returning to offices and stuff like that, so there's still a lot of empty space. Yep. So we actually had a question from Dissector here. He said, "What's your time frame on your portfolio? When do you want to like use the income?"
I think if I can get it to, I'd say I don't even know, because I don't plan on retiring. Even if I was making $10,000-$12,000, I like my job, and I don't think I'd ever stop working where I work.
Oh yeah.
So I'm definitely gonna work another 15 years, probably even 20 years.
Yeah.
But I just want something to enjoy money, have this income in. So probably when I hit 5,000, because that's kind of what I've been contributing every month, is around 5,000 I've been putting in.
Yeah.
So when I hit 5,000 in dividends, then I can cut back on putting in, but I'll probably always keep reinvesting the dividends.
Oh,
Until
okay.
maybe if I hit 10,000, then I would probably, I still would see myself keep reinvesting the dividends for a long time. I would just shift it to more safe things,
Mhm.
I would scale out of the YieldMax into more
Yeah,
lower
safer
risk
stuff.
positions, like
Right.
SPYI or JEPQ,
FEPI.
like a couple BDCs and REITs and stuff. I'd add like BG properties and more Main Street Capital,
Hmm.
some of the lower yielding ones.
So your only liability
Yeah.
here is a home equity loan and some very minor credit card balance.
Yeah, I pay my credit card off every paycheck.
Oh, same here. Yeah, like you never pay any interest if you pay it off. Statement balance in
No.
full.
Yeah, never. I think I've paid interest like one time in my life, and I was like, oh, well, I'm never doing that again.
That's almost the same with me. I actually, one time they billed me, but it was their fault, and they had to reverse it.
Yeah, I
Yeah.
think one time I just ran it up too high, and it was, I think my credit card was like 10 grand, and I had to pay that $300-400 interest. And I was like, oh man,
Oh yeah,
never doing that
at
again.
those high interest rates, yeah, you don't want to do that. So I see other asset. It says it's got like the bulk of it in other assets.
So that's my house. My house is almost paid off. It's worth about 400,000.
Oh, nice. Yeah, that's so you're like majority real estate then.
Yeah.
Yeah.
I mean,
That's awesome. Yeah, real estate's definitely a great asset to be in. So we had a comment say, "Have you thought about using the VOO for growth and making your own dividends?" This person's a little bit anti-dividend income, so they say, "Why focus on income?" Because we're having that income versus growth debate. And to
no,
his,
I get that.
yeah,
I need income. The reason why I'm focused on income is like, it's kind of a psychological thing. I don't want to have to time the market to try to sell. Or, I
Yes.
always had So a long time ago, I bought General Dynamics stock when I was like in high school,
Oh yeah.
and then I think I sold it in like 2010,
Mm-hmm.
and it's worse. If you look at the price, I think I sold it for, I made like a profit on it, but then I sold it. And if I look at it today, that's like, oh, I just lost $50,000 if I would have just sat on that, you know. So it's always kind of rough timing the market. So that's why I use my employer's retirement for growth, and then I'm just, because I kind of want to enjoy the money now. I want to be able to travel and do stuff. So if I can replace kind of my job income, I can burn more time at work. You know, I can burn more time at work, and then I can
Yeah.
start pulling the dividends out and spending it.
Right. Or you could even shift to like part-time or something.
Mhm.
Yeah. That's awesome. So then you've been investing like since high school then.
Yeah. I mean, not as heavily as I have been in the last year.
Right.
But yeah.
Right. Yeah, because
I shifted a lot towards
mm-hmm.
getting out of debt. And I was like, okay, let me pay off my house. Let me pay off stuff. And then that's kind of like what I did. So when I got out of debt, now I'm like, okay, let me start growing an income portfolio.
That's awesome. Yeah, one of the and I say that to anyone that has a lot of debt, like that's one of the best rates of return you can get at the time is to pay down that debt, because like we were talking about, those credit cards can be anywhere from 20 to 30% interest.
Yeah.
Yep. Well, that looks I mean, it looks really good. I'll tell you, your dividend portfolio is better than some YouTubers' portfolios that I see.
Yeah, I talked to that guy a couple times I came on his couple of live stream when I first started, and I was trying to tell him that I was like, NVIDIA is better than Tesla. I was like, I don't know, I don't get the appeal of Tesla.
Well, that's where I'm going.
Tesla
Yeah.
is very more volatile, way more volatile,
Mm-hmm.
but I feel like NVIDIA is a safer company in the long run.
Yeah. So NVIDIA, it's interesting. You're talking about like the psychology of investing and stuff, and I agree on a lot of what you're saying, because what I've noticed is that a lot of what I sell out of, if I just held it, it would have continued to grow like much more. And then
Yeah, if I sold something that grew a lot, I was like, oh my god, I regret it. I'm like, oh man, I should have just held that.
mm-hmm.
It's gonna be really hard for me to sell my two grayscale positions just because of that. I'm like, man, when am I gonna sell this? But I'm like, I at least want to hold it for a year so I don't have to pay the capital gains, the long-term capital gains, or the short-term capital gains.
Exactly. Well, and I go back and forth on that myself, because looking at NVIDIA, which you mentioned, so we've got NVDY, which is a total return of 120%, but NVIDIA stock over the same time frame is up like 250%. And then if you held that for a year, your tax structure is completely different, because then you're looking at a long-term capital gains rate of 15% versus ordinary income of, whatever your tax bracket is, which would probably be, in most cases, higher than 15%.
But I think another thing too is if you create good income, you can use that to later invest in the growth stuff. Because it's kind of like, it's the opportunity cost. Like, oh, if I have thousands of dollars coming in dividend income every month, well, I'll take a flyer on a Palantir, or I'll take a bet on medical property trust coming back, or one of those. You can take a lot of long shot bets.
Yeah.
That could pay off.
Mm-hmm. Oh, you mentioned General Dynamics. I was going to look that one up. Yeah, that
Yeah, I
one's...
think it's GD.
Yeah, GD. Yeah, since 2020, it's up 150%. I bet they had a big increase after like the whole Ukraine thing.
Yeah, I think. I mean, I had it. I think I bought it in 2003.
Yeah.
And I think I sold it. I think I sold it in 2011 or 2012 to
Yeah.
buy a laptop. So I was like, oh, I can get a laptop for this.
Right.
And I was real short-sighted, because I was like, man, this would have made $30,000 if I would have just held this.
Yeah. Well, I could tell you a story. I could do one up from that. So NVIDIA, do you do options at all?
I messed with it
Yeah.
a couple months ago. I was wheeling Palantir, 3 or 4 contracts at a time.
Okay.
And I got assigned, and then I got called away, and then I was like, well, this is kind of rough. But I mean, in the end, I was profitable with it, so it was fun. But I don't know if I would do it again.
Yeah.
Maybe later if I had more income to play with, I'd probably do it again.
So we've got some phenomenal people in the Discord that are making a lot of money on the wheel strategy. I'm actually trying to take notes on what they're doing, and I've done a couple of trades myself. But yeah, they post their trades in there in the wheel strategy subthread.
Yeah, I've seen that. Yeah.
Yeah. But anyway, yeah, my story is about NVIDIA stock. So I owned like 5 contracts. I was doing leap options after Congress passed the CHIPS Act in like July 2022. And I held them through a couple of earnings quarters. There was a couple of earnings quarters they missed, and then it started to drop, which with options, that drops the options a lot faster, of course, because of leverage. So then, like in February of last year, I sold the options for a pretty good gain. I think it was like a 200% gain or something, but had I held them until close to their expiration date, oh man, it would have been like $100,000 profit.
Yeah.
Yeah. Yeah, that's what happens.
Yeah, the NAV erosion is what got me out of the Defiance position. I saw somebody commented.
That's
about
what
the
you were
NAV
saying.
erosion.
Yeah.
I was like, the NAV erosion, you can kind of see it. You're like, oh man, it was such a large position for me because in the beginning I thought, well, let me start with QQQY.
Right.
Because it was like 2 months after their 2 dividends were $1 each. So I went like really heavy into it. I
Yep.
think at my QQQY was like 17,000 was my
Mhm.
position. And then I had like another 3,000 or 4,000 in IWMY. I mean, I didn't actually lose out because when I sold with total returns, I was up 2,500, but
Mhm.
I sold for like a $1,500, loss on the NAV.
Yeah.
And IWMY was kind of worse. I think my IWMY I was like $5 I made because of the total returns, and then the NAV. But I was just like, this is just because you can watch it erode every month. You're just like, man,
Yeah.
if this market, the way it works, or the way I've noticed, because I'm not very good, I'm not a stock expert,
Mhm.
but the way I've noticed is it does not recover. When the market's way up, it only goes up a few pennies, but when it's down, it goes down a lot, and there's not enough time for it to recover.
Exactly.
And then they're paying out huge distributions every month. And if you follow the other guy, the retired on dividends guy, is like his tracking. He's like they made 11 cents this month, and they're going to pay out 70 cents. And I don't see how that's sustainable.
Right. Yeah, I haven't
When
actually.
he tracks their
Yeah.
when he
Yeah.
tracks their intrinsic income, it's like I don't see how that works.
Oh, I see. Yeah, I haven't watched his videos in too much detail, but he does like spreadsheet analysis, right? And he's looking at the daily trades.
Yeah.
Hmm.
Yeah, when I was in QQQY, I watched his videos every day, like clockwork. Like that was the first thing I was looking forward to. Was like, oh, let me see what's the strike price on their puts. What are they? How much do they get full profit? And it's a pretty good market we're in. The last, since pretty much December has been a pretty good market, and they're not recovering.
Hmm.
I just don't see how it can last. So that's why I shifted to SPYI, and then now I just bought FEPI2, which I like a lot. So I'm going to try to just beef those positions up a lot to where they're the majority of my portfolio, probably 20% or so.
Yeah, FEPI is definitely the NAV is increasing, and they're paying out like a 25% dividend, which is awesome.
Yeah.
I think someone said in here, I got a comment that said there are a ton of income funds that outperform growth. I'd be interested to see some tickers if that commenter wants to throw those out. I'll definitely take a look at those. But anyway, yeah, overall, yeah, great job on the portfolio. Like I'm saying, even the dividend funds you're up in, which is phenomenal.
Well, I appreciate it. Thanks, Sam. I'm like, just going to keep trying to grow it bigger and bigger.
Yeah, feel free to come back on. I'm gonna make this probably a twice a week thing, with the live show, and yeah, we'll all hopefully get rich together, right?
Oh yeah, I hope so.
Yep. All right, so let's see. So
Well,
Chuck.
alrighty,
Oh, go ahead. Yeah.
I'm gonna head off. I'll let somebody else talk. I
Okay.
appreciate it.
Sounds good. Yeah, good talking to you. Have a good one. All right, bye.
Later.
Yeah. Okay, so we've had, let's see, Chuck has been on for a while. Did you want to say anything, Chuck?
Hello?
Hey, Chuck. How are you?
Doing all right. How are you?
Good, good.
No, actually, I'm kind of in the same boat as the last guy that was just on.
Yeah.
And to kind of, because I've been reading through the chat and seeing like that sector talked about growth and you all are talking about growth.
Yeah.
Now, I did just apply for options on my portfolio and I just got approved.
What level?
But I can, level 1.
Okay, yeah.
So it'll only let me do, was it covered calls? Give me 1 second. I can
actually
find
pull
it. It's
that
like
up.
covered calls, covered calls, buy rights, and covered call roll.
Mm-hmm.
But the thing is, I keep hearing everybody talk about puts. It seems like everybody's making more money on puts than they are on calls.
Yes.
So that's kind of where I get kind of hung up because I've never done options trading before. I'm not against learning it, but the majority of it out here is puts, not calls.
Yeah, so if you look at the wheel strategy subthread of the Discord, these guys in there are making lots of money on the wheel strategy. And so you can make money both ways. Like I've successfully bought calls and then sold them for a higher price and made money that way. But this way, and we're looking at bar charts and stuff like that, which I got the premium membership for. It's a good screener for these. And there's some companies like Mara, you can make a good weekly premium on it. And I'm actually trying to get my options level to like level 4 and do margin and stuff. That way I can actually do more of these, because where I am right now, unless I actually owned all of these underlying, I need to use the margin to do these cash secured puts.
I gotcha.
Yeah. I mean,
which one of these would you recommend buying to start off doing, I guess you would say, covered call options?
Well,
you said Mara was a very popular one.
Well, so Mara is one. I closed out a position last week. I had to roll it the week before, but I was able to close it out for a nice gain. These are actually cash secured puts. So the wheel strategy, you would start out entering, if you're trying to enter into a stock, and this is what Warren Buffett does, you would sell a put, a cash secured put, meaning the money is in the account, to potentially buy the stock. And then so say, like for Mara, $20 strike price. So 10 contracts of Mara at a $20 strike price. If that expires in the money, then you would end up entering the stock at expiration date at $20 per share. And then you own that stock, so then you can sell covered calls against it. And then if you sell the calls and then they come into the money, then you'll end up getting called out of the stock. So you collect premium from the cash secured put at the beginning of the wheel, and then say there's two things that can happen. You can either enter the stock at the price that you picked, or it expires out of the money and you just keep the premium, and then, as they say, rinse, repeat. If you do enter the stock, then, like I was saying, you can sell covered calls against it, and then if those end up in the money, you get called out of the stock, then you collect the premium from the covered call, then you have the cash again from the stock, and then you can do you can sell puts all over again, hence the wheel.
Gotcha.
Yep. So,
But, I mean, maybe it. So what you're saying is I would actually have to either apply to get to level 2 on the options.
yeah, let me just actually, some educational for the audience here. Let me go over like the different levels of the option. So if you have level 0, you can actually do covered calls, covered puts, buy rights, unwinds, and covered rollouts. And then level 1, is everything in level 0 plus long calls, long puts, straddles, combination strangles, cash secured equity puts. Level 2 is spreads, diagonals, ratio spreads. Level 3 is uncovered calls, uncovered puts, uncovered rollouts, short straddles, combinations, strangles, uncovered ratio spreads. So the higher levels, I think, come with margin. And that's what I'm looking at, because right now I can do maybe one of these trades per week, but my broker won't let me do a second one without margin. So that's what I'm looking at doing at this point.
Gotcha.
And yeah, the goal is, I'll post the trades in there just like everybody else does, and hopefully I can do at some level of what these others are doing.
Oh no, a lot of those guys are making, like, didn't one guy make, it was like 3 or 4 grand in a week, or was that a month?
No, in a week actually. This is his latest week, 4,300. So year to date,
That's just wild.
yeah, he's at like 30,000 year to date.
Alrighty,
Yep.
not bad.
Uh-huh.
Not bad at all.
Not saying everybody's going to be able to duplicate that, but it's been done by someone. But yeah. Oh, and then I was
I'll
supposed
get there
to.
eventually.
Yeah, of course. Yeah, we'll all get rich as a community. But let's see here. Yeah, so I've got a lot of commenters telling me to switch to Robinhood. I was supposed to talk about Robinhood on the video. Actually, I spent like 2 minutes talking about it. But they're doing a 1% match for new assets that are rolled over. So I don't know. I might consider it. I've heard a lot of like mixed things about it. Do you use Robinhood, Chuck?
No, I use E-Trade.
E-Trade, okay. Yeah, I have an account at E-Trade. I also use Schwab. Robinhood, I think I did open an account to get like their free stock promo, which they gave me like 1 share of a stock that was like $10 at the time. But I don't know if they're trading 24/7, or if there's like someone said they're open like 24 hours or something. I mean, I might have to consider that. So anyway,
Yeah, I mean, I got kind of turned away from Robinhood when they went through that whole AMC debacle, where they just kind of like locked everybody out.
yeah, that's what happened to a lot of people too. Yeah, getting kind of turned off by it.
So originally I was probably going to go with Robinhood, but because of that, I went with Webull instead. And then I closed out everything out of Webull and then moved everything to E-Trade.
Oh yeah.
Yeah.
Well, that's good. Anyway, all right. Let's see. I think I'll read some comments here. I think I've been going for about an hour and a half, so we'll probably end it here pretty soon. So, anything else?
Yeah, appreciate it, man.
Yeah.
No, sounds good.
All right. Yeah, sounds good. Okay,
All right,
then.
thanks.
Yeah. Talk to you later. All right, let's do some comments here, and then I'll end it here. Okay, so the VOO, let's see, we had a discussion here. I encouraged 2 of you to come on the live chat and hash this out, but you all kind of clammed up once I said that. Let's see, so we had Ben Mallison and Dissector. You can use income as your growth. See, I sort of think the opposite. I think you can use growth as income. Dissector says, I love dividends, just not YieldMax. I understand the physiological appeal way more than delusion. This guy is a dog. Yeah, not really. That's an oxymoron. The income funds will still underperform growth. Yeah, so I'd like... I had a couple commenters mention that they had a long list of income funds that are outperforming growth. I'd like to, if you all want to post that in Discord or post that in the chat, I would definitely like to see that as well. Richard King says he has 4 REITs. Which REITs are those? Thoughts on NAV erosion? I think we covered that. Redfish says, ask him if he's planning on adding Misty. Notice his portfolio didn't have it. Yeah, probably not, because I think Misty's at like an all-time high, so you're going to be buying in. Maybe after the ex-dividend date. CJ Navage says VU 10% return over the most recent 3-month period. Yawn. Let's see, Dorganer said BCHD and Litecoin funds have been ripping up 140% between those two, offsetting the red on the YieldMax. Yeah, those are definitely ripping for sure. And then some of you are telling me to switch to Robinhood. I don't know if I can. I have to use like an approved broker. Let's see. Feel like I missed the boat on Misty. Price is too high right now. Here's another commenter that says Robinhood that I should move to. Trendy to diss Robinhood, but they've made me bank. Oh, good to know. 76,000 in a month using the wheel strategy. That is incredible, Redfish. Let's see. Someone says they're using Webull. And let's see now. Oh, retire on dividends, covered calls. Let's see. We got some more comments here. Closed at 6 on holidays, Friday night to Sunday, 6 p.m. Freddie Flintstone is on. All right. Every broker locked everybody out of that trade. Yeah, that was for AMD. Or no, for AMC, right? I was one letter off. Anyway, well, all right, you all. I think that's a pretty good live stream for tonight. Thank you all for tuning in. Like, comment, and subscribe, and join Discord, by the way. I put the link in the chat. It's way up here now. I think I've got it right here. So if you want to scroll through the chat history, definitely would encourage you all to do that. And, okay, well, good participation tonight, everyone. And we'll try to make this scheduled thing, maybe 2 or 3 times a week. Looking forward to talking to Roundhill tomorrow. Again, as a reminder, if you all haven't put your questions for Roundhill, type them in here. We'll definitely go over all of them. We just got a new one here from Brad Nick. What back testing have they done specifically to account for a major correction? Good question. We'll try to ask this one. Someone asked if the QDTE and XDT are a long-term hold. I don't know about that, but anyway. All right, you all. Hey, oh, the Discord link? Yeah, I'll be tough on them. How does the Discord link not work? Some people say that, but keep trying. Try it like a second or third time. Comment if it doesn't work. Otherwise, we will see you all. Well, really, I won't see you all, I think, till next month. I think this is my last live stream of the month, so I'll see you all next month, which is really, 2.5 hours away. So, all right, again, like I said, take care, everyone. Like, comment, and subscribe. Join Discord. And all right, we will talk to you.